Welcome to this live queue with Formpipe. My name is Fredrik Nilsson and I'm an equity analyst here at Redeye. Today we will start with the presentation by CEO Christian Sundin, and then there will be a Q&A session. And if you have any questions, just send them in to us using the form under the stream. You're welcome, Christian.
Thank you, Fredrik. Nice to be here and welcome everyone. As Fred said, I'm Christian Sundin, and today I will cover the Q4 report. But today I will also try to give a short recap of what we said a year ago in terms of our then newly published growth strategy. So I will have a short recap on that, and then I will browse through the Q4 highlights, and then sum up the full year highlights, and then shift over to a Q&A with Fredrik, and hopefully questions from you out there. So what we did a year ago was that we published financial targets for Formpipe. We were coming from several years in working consistently with growing recurring revenue and increasing our margins. We published new financial targets aiming on getting the speed of growth up. So these were the targets we presented, that we should have an average annual growth of at least 10% a year from 2021 to 2025. We will grow this mainly by growing recurring revenue continuously as we did before, but increase the speed of that with build up of ACV, leading us to a position where we in 2025 have at least 70% of our revenue as recurring revenue. We would take a hit on the EBIT short term, but since the scalability of recurring revenue is so great, then the EBIT will gradually come back with the growth of recurring revenue and top line. And we will, during this time also, since the scalability of the business model and the cash flow generating business that we have, be able to pay dividend to our shareholders, meanwhile growing. So, what did we say? Yeah, we said 2021 is the start of a new journey, a growth journey. We will focus on accelerating growth both in the US and Europe. We will invest in sales and support to meet the demand and to really support our strong partner network around the world with mainly LaserNet sales internationally. We will drive this revenue growth through the growth of SaaS, and we will continue to look on acquisition to complement the organic growth. The investment is mainly in capabilities to support the partner network. More staff, more competencies, more talents to support our partner network. And the partners, the channels we're really looking on is to support Microsoft and Temenos. Microsoft ERP system, Dynamics, and the banking system, Temenos, where we, with our product LaserNet and Autoform DM, is a very strong complement to their platforms. And we will, meanwhile, continue to focus on excellent deliveries to our existing customers in both public sector and, of course, in private sector. And as I said, this investment in larger capacity would lead to lower EBIT margins in 2021. Also presented how we will do this, that we have slightly different approaches to how we will grow in the public sector compared to the private sector. We will continue to the biggest growth potential we see in the public sector is to grow with our customer base. It is to get closer to the end customer and to co-create new add-ons to the platforms within their environment and make sure that we can cross-sell that to the entire customer base of public sector. So we see good growth potential in pursuing that opportunity to helping our existing customers and new customers in the public sector with more things than what we do today. And we also see a good potential to add on markets, bolt-on acquisition through adding markets where we have a scalable approach of selling the add-on products to our platforms to a larger customer base. And meanwhile, doing this investment in growth, we still see good possibility in maintaining a good profitability and grow the revenue. In private sector, we have a strict partner channel-driven sales strategy, which mainly focuses, as I said, on Microsoft and Temenos. And they are both gaining market share and growing significantly, and they are both very into the SaaS transformation. We are joining their growth journey, really supporting their offering in SaaS. So we are investing in more resources, more talent and competence to support that partner network, Microsoft and Temenos on themselves, but also their partners and delivery partners around the world. And we're specifically aiming at the growth of the SaaS revenue in this area. That was what we said a year ago. And when it comes to the public sector and private sector, different both M&A strategy and growth strategies, I'm pretty certain that Fredrik will, or you out there, will come with questions due to the comment late in the CEO comments of the Q4 report. So I will come back to that during the Q&A session to give more flavor on that. Q4 highlights. Yeah, we are showing an 18% growth in Q4 compared to last year's Q4. So we're delivering on our growth strategy in terms of that. And we see strong demand both in public sector and in private sector. We are on a new level of ACV and has been so from Q2 and onwards. The investment in increased capacity is really paying off. We're now showing an 11 million ACV number in Q4. And we are also seeing that the strategy in public sector with becoming and building capacity to be a one-stop shop for the public sector customers is also paying off in revenue growth, where deliveries is up 43% compared to Q4 last year. So the total growth, as I just pointed out, is up 18% from last year, which is 19 million. This is primarily driven in this particular quarter by increased delivery revenue from the increased capacity we see that, and mainly from Danish and Swedish public sector. We see that the recurring revenue continues to grow more on a normal level of 9%. We've been growing recurring revenue actually for 10% for many years. So, but still a solid growth of recurring revenue in Q4, and we see that SaaS is up with 33%, which is 5 million on the quarter. License revenue is flat compared to last year, and that's probably a little better than expected since we are in a transformation from traditional license to more and more SaaS. And you shouldn't expect license revenue to come back to higher level. But we need to remind of the huge license deal we did in Q2 on 30 million Danish. So of course that's also business. Good business, big business is also real business. So that's good. But that was more of a one-time deal we had in Q2 on that. So the investments in growth, they are driving costs for us, as we knew from the start. But the number of employees in Q4 is actually flat from the summer, even though we're 22 people up from last year. So staff cost is higher, and we are at year end 274 people in the organization. Sales expenses are also up, and that is partly driven by subcontractors in delivery projects, but also from partner kickbacks. And other cost is also up, and that is mainly due to increased marketing. I mean, there's been window of opportunities to have marketing and to drive further activities in 2021 compared to 2020, but still we see that marketing expenses are likely to increase further in 2022. But also we are increasing speed on R&D, and a lot of that R&D is made in offshore accounts, and offshore resources comes into other costs. So total costs are up 22%, but despite that, we are still delivering actually better EBIT than last year. So the growth in revenue is really making up for the increased cost. We will continue to ramp up capacity with even further cost in 2022. So we're not through that. We will start to see increased margins from that just yet, but we will see accelerated growth and accelerated ramp up of capacity in 2022. As I said, we're fairly flat on employees from the summer, and that's not for us that we haven't added people. We have added people, but there is a challenging market for talent. So we also lost some people. So we will continue to pursue the path of being more people. And one step in that is that we just recently, early January, added 19 employees, really skilled talent and competence on our platforms. A former partner that's now in the house of Formpipe, and that we welcome Alchemit acquisition and adding another 19 people to our competence and capacity on fulfilling the strategy of one-stop shop. And to sum it up, the most important key figure for us is ACV and ARR that follows from the ACV. And as I said, we have reached a new plateau of a new platform or a new level of ACV that we have consistently delivered from Q2 and onwards with the increased capacity. So we're making a really strong ACV quarter on 11 million. And this time it's actually all the business areas that are contributing very well to the strong ACV number, as you can see there. And we are entering 2022 with an ARR of 304 million, which is up from 260 million from last year's when we entered 2021. So quite impressive growth numbers in ACV. To sum it all up, the full year highlights and summary. As I mentioned previously, the big deal with Landbrugsstyrelsen, which had a total estimated value of 50 million Danish, is of course a highlight of the year. We see the relationship with Temenos getting better and better and get more and more traction in our business, and a lot of more deals as an add-on product to the Temenos platform, and that partner relation is growing really much, has grown much stronger during the year, and we were actually just appointed the solution provider of the year from Temenos. So we're very proud of that, and we see great continued sales opportunities in that channel. And the Alchemit acquisition, it was now actually in early 2022, but we see that as such a big step, giant leap in proceeding on the strategy of becoming the one-stop shop for public sector and get the end customer innovation power in the house of us, and have that capacity to address the customers to help them on the next level and the next step of their digitalization journey in public sector. So 3 really important landmarks in the year of 2021 for us. And as we pointed out earlier, or I pointed out, that the growth of SaaS is what we really pursuing in terms of growth. And we can here clearly see in a multi-year comparison on how we've grown the SaaS ARR and the SaaS ACV, that the investment in further capacity is really paying off. So really strong ACV numbers on SaaS during 2021. So ARR total 17% up from last year. 37 million in ACV during the entire 2021 compared to 22 million in 2020. and ACV growth thereby is up 66% this year compared to 2020. So are we then confident that we will deliver on the financial targets that we published exactly a year ago? Yes, we are. We're very confident that this growth strategy is paying off and that we will continue to deliver according to plan or better. So thanks, everyone.
Thank you, Christian. And I want to highlight once again the possibility to ask questions on our web page. And I want to start with the statement in the CEO comment. You're evaluating if it's a good idea to split the company into one company focused on the private sector and one on the public sector, I suppose. Why are you evaluating this?
Yeah, I mean, the question has popped up several times before in these sessions from shareholders, investors, and we just want to make sure that we do a proper evaluation. So we asked an external corporate finance firm to evaluate that to see if there's long-term logic in it. We can clearly see some cons and some pros in that on that, but we want to see and weigh them to each other and see, is it a long-term good thing to do that, or should it be, and if so, should it be done now or later, a few acquisitions along the road, or the organic growth we're delivering, should we be a little bit bigger prior to doing that? But yeah, it's an evaluation today. Yeah, we're doing.
Okay, so could you briefly tell us the main differences between the two segments to understand why it could be a good thing to split?
Yeah, I mean, of course, as being one company working together, we have already realized quite a lot of cost synergies in terms of shared finance and CEO and CFO and those sort of cost generators. But on the sales side, we are to the private sector and the public sector addressing completely different customer groups with different products and different business models. So the mission statement for in the event of splitting the company would be clearer for employees and for customers, and the focus on the business of these two potential companies would be clearer to what we want to accomplish. So we are, as many investors and guys like you have pointed out, we are quite mixed in what also attracts investors. One really fast-growing, not profitable part, and one very stable, cash-generating, slightly slower-growing part, but with a different idea of how to pursue the market and what sort of market we should go for in a fenced market. So.
Okay, interesting. And you also mentioned that you would like to be more active with acquisitions. I mean, you have stepped up the pace somewhat in recent years, but should we expect even more acquisitions going forward? And what kind of acquisitions should we expect?
Yeah. I mean, we have slightly different, or we have very different M&A strategies on public compared to private, and I hope you should expect more acquisitions to come. It's of course a matter of finding the right targets to the right price, but when it comes to the growth of private sector, we really see that we would like to find similar companies as we are, i.e. software companies with a partner strategy of supporting Dynamics or Temenos platforms. That would be the ideal. Gaining more partners and gaining another product. We would be able to cross-sell that immediately, adding Lasernet and Autoform DM to that partner channel, taking that product and adding it to our partner network. That would be the ideal target on the private sector space. In the public sector space, we're pursuing a route of being a European vendor to the public sector of digitalization, a one-stop shop doing both services and products, and being a product company, but making sure that we get the innovation power from the public sector space, making that as add-ons and selling to a bigger customer base, generating more scalability and more value to the customer base by doing that, rather than doing it in silos for one specific platform, for one specific market. Building, for example, this signature portal we built during pandemic together with a customer, where also our customers working from home, and you could argue there are plenty of signature products out in the market that you could make your signature digitally on a distance, but they're not really living up to the archive standards and the rules and regulation of public sector. So we built that together, thanks that we were out at the customer, got the innovation power from them, and built that product, and now addressing that to the entire customer base we have in public sector, and have sold a lot of them during the last quarter. So it really pays off and generating more value to the end customers by doing it that way. So very, very differentiated M&A strategies as well. But yes, the short answer is yes, we see that the intensified work with finding targets, and we also have, it's the same advisor we have in to really help us screen Europe for acquisition targets. That is bringing a lot of ideas to the funnel of targets that we could pursue.
Okay. Is it possible to give us any estimation about when the evaluation will be complete?
Well, we foresee that the evaluation will be done from the external party prior to summer. But that doesn't necessarily mean that we have a decision prior to summer. It could also be that the evaluation shows that, yeah, it could be good later or now. It could be good with this after this acquisition or whatever. So to give a timetable of something that is not decided is quite difficult. So see it as an evaluation, and also if the evaluation proves that this is a good thing long term for both of the companies, yeah, what preparations need to be made, how to set that up in a proper way. So it could be a plan for a multi-year thing as well. So.
Okay. Interesting. And also, you mentioned the acquisition of Alchemit, and I mean, it's a quite small acquisition, but still it seems like it's quite important for your strategy. So could you elaborate a bit? I mean, what will they do for your public Swedish segment?
Yeah, I mean, you're spot on. It's not a very big one, but neither was EFS 2 years ago. And look what that has given us on the private sector side with the competence we got in with EFS. That was game changer for us to pursue the growth strategy we have of Lasernet and Autoform DM. And the same thing applies for this. We're buying competence, the people we're getting in, the skills, the structure capital, and the work, the routines of being a delivery partner. We have tried for 1.5 or 2 years to build that up on our own. We have not been very successful with that work to learn how to be doing successful deliveries. We see deliveries being an important part of actually get that innovation power for co-creation and being out there at the end as a very important stepstone on our growth strategy, becoming the one-stop shop. So I consider this to be that we're shortcutting 2 years of execution on our strategy to get all that competence in the house, adopting that and getting that out in larger capacity to our customer base. So I really think this is a big thing doing with this acquisition, and it is spot on for our strategy.
Interesting. So now we have a question from the web. What's the global market potential for Lasernet?
Well, Formpipe is a really small company, so market potential is not really what will stop us. I mean, there's a gigantic market. Even though Microsoft on the ERP space, they are gaining market share and they're growing fast, but they're still only, I think, 8% of the ERP market. So, but the ERP market is gigantic compared to us. So market shares is not really what makes a difference for us to grow. If we grow with 18% or 30%, that is not due. It's only our own capacity and competence on how to go for that market that will make a difference on how much we grow. But of course, we are where we are today. We're not even a percentage of any market in terms of the laser growth. So we're a very small player still.
Okay. I mean, you, as you mentioned, your ARR growth, or ACV, as you call it, has reached a new level for some quarters in a row. But this time you also had quite strong numbers in the public segments. Could you tell us a bit about that? Why have they?
Yeah, that's actually evidence to what I say about add-ons built in co-creation. The signature portal and product and Adoxa product are two main reasons for us making it possible to do bolt-on sales to mainly existing customers on the platforms we're having. So we did 47 individual deals in Sweden public sector alone in Q4. So and that adds on to our recurring revenue, and that is the explanation behind the ACV.
Okay. Once again, I want to highlight the possibility to ask questions on our homepage. You were awarded Solution Provider of the Year from Temenos, and looking at the numbers, it's clear that the sales together with Temenos has developed quite well recently. Could you tell us a bit about that award? I mean, is it important, and why, if so?
Yeah, it's mainly the relation building with Temenos, making all Temenos aware of our existence. I mean, we still only in a fraction of all Temenos deals done worldwide, and spreading the word about how good LaserNet and Autoform DM is together with the Temenos platform around within Temenos is very important. So it's internal marketing within Temenos, but this clearly states that we are the third-party software that sells most of all third-party softwares within Temenos platform. And we are really increasing the traction within Temenos thanks to this, but also thanks to very hard work over the year, and going from prior to acquiring EFS summer 2020, I think we had mail contacts and had regular contacts with one or two persons at Temenos. Now that's most likely 50 people that knows who we are in their sales and marketing organization. And we're also now into their product development organization, and we're doing things together in terms of seamlessly integrating LaserNet with their cloud platform, and we're the first one doing that in Temenos. And we're also looking on, okay, could we build more things that could be added on to the Temenos platform? So a very interesting relationship with Temenos. So we were really proud of this award from Temenos.
Interesting. And you have some external capacity in Ukraine, and I mean, there could very well be, unfortunately, a dangerous situation there. How can you handle that, if you can, in any way?
Yeah, it will be bump on our product development side, and we also do some deliveries with help from capacity in Ukraine, and that will be a hassle. However, we have a contingency planning on that. We have already, prior to the escalation of Russia-Ukraine, we have looked into other alternatives, mainly due to cost reasons of increased level of cost in Ukraine the recent years. But we have fallback alternatives for our product development. It will be a bump on the road. on the product development side of roadmap things. However, I don't foresee it becoming a big issue for us in terms of sales. We will build up a depth to our customers of things that will come, and probably some postpone releases of new versions of products. But we will handle it, and we made sure. I mean, we are ISO 27001 certified. It means that our information security requirements from our customer base, mainly in public, are so, but also in the banking world, are so high on us. So we are audited continuously. We have routines and procedures making sure that the code that is in Ukraine, of course, we have it under control, regardless if Putin shuts off internet connection. And we also have alternative routes of communicating with the people that we have help from in Ukraine, even if internet is shut down by satellite phones and so forth. So there's continuous planning made. Of course, it would be most of all for the people in Ukraine. It would be not so good, but we will manage.
Okay. And you started with discussing your during the last year your new strategy.
Yeah.
And I mean, so far it looks like you're on track, probably a bit on the strong side compared to the. But what will you have to do to continue on that path into 2025?
I would say more of what we're already doing. And I mean, we're very happy with, or we are really following plan with private sector and public sector Denmark. We have been we've been struggling slightly with the execution of the strategy in public sector Sweden, but the Alchemete acquisition sort of paves the way for us to catch up and also do that really successfully. And as I said, the signature product and so forth. But it's doing more of what we're already doing. We're doing it quite well right now, and we are on a stable path or a good path, and we just do more of what we're already doing, I would say. But of course, bolt-on acquisitions on top of that would add extra flavor on it. Of course.
Okay, thanks. Any closing remarks?
No, I mean, I'm quite proud of the year and the people working for Formpipe. So I hope to be as proud next year, standing here or already in Q1. So yeah.
Okay, thank you very much, Christian.
Thanks.